Accent, new fashion wear for men.
Hello and welcome to Bloomberg Quint Live, and you're watching Trend Spotting. I am Shraddha Babla.
And I'm Neeraj Shah. In the next 30 minutes, we deep dive into specific trends in the markets to draw out some key conclusions and implications for investors. First, the headlines at this hour. Steady day of trade on Dalal Street with the Nifty trading above the 10,450 mark. PSU banks lead the gains while the IT players weigh heavy. Broader markets outperform. ACC and Abuja declare a master supply agreement aimed at providing incremental benefits to each other. Indigo slips in trade after the Indian aviation watchdog grounds 12 Airbus A320 neo aircraft fitted with the new Pratt & Whitney engines. And defense PSU Bharat Dynamics 960 crore IPO opens for subscription today.
All right, let's first take a look at how the markets are faring at this hour. The Indian markets have extended their gains with the Sensex topping 34,000 and the Nifty advancing by another 0.3%, mainly led by gains in financials. Mid-cap and small-cap indices are faring much better, seeing gains to the tune of 1% or so. But as far as the broader markets are concerned, the market breadth remains positive with the advance decline ratio at about 3:1. There are three noticeable trends that I want to highlight. First is the PSU bank index, if we can pull that up and if we can do a MRR1 on that as well. So the Nifty PSU bank index is up more than 3%, and this could be probably on the back of short covering. Bank of India has been leading with gains of about 10% or so, and this is after a PTI report which said that the management has said that they've managed to recover 7,000 crores worth NPAs in the last 2 months. So they're expecting another 2,000 crore recovery going forward. So that has sort of rubbed off positively on some of the other state-run banks as well, probably, but it could be short covering as well. The second thing that I want to point out is the Indigo cancelling 47 flights after DGC has grounded planes with faulty engines. That's a PTI report. So look at the way Indigo shares are doing. They had slumped nearly 2%. Some recovery seen right now, but they slumped as much as 2%. So Indigo's market share loss could spell gains for Jet and SpiceJet because both of those stocks were trading about 1% higher. They don't have these aircrafts. The third thing that I want to highlight is the future group stocks which are surging in trade. Future consumer supply is trading about 13% higher. Future enterprise is also advanced by about 10%. Future retail and future supply chain are also trending higher, Neeraj.
Yeah, I think there's some merit in looking at PSU banks for sure. There was a fair bit of traction that we saw in late trade yesterday. If you combine yesterday's 1 hour move and today's move in a matter of 3 trading hours or 3.5 trading hours, I think PSU banks have had rallies of almost 15 to 20% apiece from the lowest that they were trading at. Andhra Bank, for example, was trading 15% lower at a point of time yesterday. It closed about 5% lower, so there was a 10% intraday move, another 6% that it is added today. Bank of India, similar moves, 10% higher or almost 10% higher in the session today, and a clutch of other 11% higher, excuse me, and a clutch of other PSU banks are doing extremely well. So that's a space that is definitely trending in the session today, and that has to be the PSU banks. That aside, individual pockets, I think Shraddha highlighted the future group stocks, maybe a flash in the pan move really. It's been beaten down so much. I've seen brokerage after brokerage speak about future consumer for a really long time now, and the stock has continued to fall. So at 50, maybe this Motilal Oswal note leads to this dead cat bounce into future consumer. Let's wait and watch if there's more merit in owning this. For now though, yes, for today's session it's trading well. Let's see if it continues to do so.
All right, let's see what we have lined up for you on Trend Spotting today. First, we will discuss the possible roadblocks for Indian automakers with Bharat Gianani of Sharekhan. After which, we move on to a discussion on summer and if the blazing summer will be a boon for companies in the air conditioning space. We will ask that to the Joint Managing Director at Bluestar, B. Thiagarajan. And is Inox Leisure eyeing more properties? We will ask the Chief Executive Officer, Alok Tandon. Let's first put the spotlight on the auto sector then. And while automakers did cruise through February, there is an overhang of Donald Trump's import tariff on auto players. While imposing import tariffs on steel and aluminium, US President Donald Trump had also hinted at wider tariffs to arrest imbalances in duties and trade flows with a focus on autos. What kind of an impact can we expect on the auto players if this does take form? Let's get an analyst view from Bharat, Gianani, the research analyst at Sharekhan. Good morning, Bharat. Just want to start off by asking you how much of the Indian auto industry's total exports are to the US. So how important is the US market for Indian auto companies?
Good morning to the viewers. Definitely US, the exports as the overall revenues of the auto ancillary companies is close to 30% if we take the automotive sector as a whole. And US is one of the key markets for the component players. So definitely if there is any tariff hike as proposed by Donald Trump, then definitely it is going to impact the sector as such.
Bharat, which are the auto stocks which have meaningful exposure to the US?
Among the listed entities, Tata Motors, we believe will have a direct impact because US contributes about roughly 20 to 22% of the volumes for JLR, the luxury unit of JLR. And Tata Motors does not have a manufacturing presence in the US. So if any presence, if any adverse duties are imposed, as the president has been saying, then we believe amongst the auto OEMs, the Tata Motors is likely to have a very significant impact. So that will be the key stock to watch out for. Amongst if you see auto ancillary players, couple of names like Motherson Sumi also has an exposure to the US, and it majorly supplies to the European customers such as the Volkswagen Group, the Audis and stuff, which in turn export most of their cars to the US market. So if any adverse tariff is imposed, then European OEMs may be impacted, which will have an indirect impact on Motherson Sumi. The other auto ancillary stock which we would like to highlight is Bharat Forge. Bharat Forge also supplies a lot of components to the US market, to the Class 8 trucks and even to the passenger vehicles. So another company that could be impacted would be Bharat Forge if any adverse duty is imposed on the components. And the third stock we would like to highlight is Endurance Technologies. Endurance Technologies also has 30% of exposure to the European markets, and if the European OEMs are imposed on any adverse duty by the US, then it will have an impact on Endurance Technologies also. So in our space, this 3 or 4 stocks which drive significant amount of revenues from the export markets, and that too particularly US. So this companies we believe can have an impact if adverse tariff is imposed.
Bharat, is there any ways you can estimate or quantify the kind of impact that would come in on the volumes and hence also on the margins then?
Very difficult to quantify because the rate of tariff which is there, it is not known. The US president is also contemplating. So that kind of a tariff, what kind of tariff is likely to impose, that is also not clear. So very difficult for quantification. But if we see the contribution of the US, then Tata Motors roughly 22% of the volume is from the US market. And if we see Bharat Forge and Motherson Sumi, their contribution to the US market, Motherson is indirectly contributed to US, but still they form about half of the revenues for both Motherson Sumi and Bharat Forge. And as far as Endurance Technology is concerned, 30% of the revenues comes from the export markets. So very difficult to put a number unless we know the exact nature of the tariff imposed by the US.
Bharat, the other thought here is whether US-based suppliers can actually substitute large component exports meaningfully given the lack of capacities in the US, even if these tariffs were supposed to be or did, do take form.
No, US basically what India has an advantage in the form is basically the primary being the labor advantage. The labor cost in India is significantly lower, and a lot of foreign OEMs have also set up shop in India. So the level of supply and the level of quality which the foreign OEMs require, Indian companies have been able to match that, and they have been ramping up the supplies. So we need to watch out. But any adverse tariff imposed can have can reduce the cost arbitrage which is there. But as of now, we believe we need to really watch out what the tariff impact is. But if it is not there, the Indian auto companies have truly managed to meet the global standards.
Bharat, I was just looking at what some of the auto companies and auto ancillary companies have done since the demonetization low rally started from 26th of December. There are two stocks which are underwater right now. One of them is Tata Motors. The other one is Bosch. Not strictly an auto name, auto component, but a large enough name nevertheless. Do you have thoughts here? Because they have not returned money to investors at all, despite the indices being up 30%. We all kind of know what's been plaguing these companies. Can they come out of the rut in 2018?
Tata Motors, I mean, a lot of issues still remain. One is obviously the US, the threat of US imposing a duty. Second, the developed nations have seen the growth really moderating. So second one is the UK home market is expected to impose higher duties since they are now charting out their own budget post the Brexit. They're taking steps. So there is a talk of a rate hike in the UK market as well. So that will keep the pressure on the sales. But nevertheless, we expect the margins to bounce back given the forex exposure will sort of get reversed in the following quarters. But what we believe is that the near-term concerns on the volumes remain, and also even if the margin sort of reverses because of the forex reversal, again the management has stated that because of the introduction of electric vehicles, since they are not a very scalable player in the luxury car market, so they will have the EV cost development for JLR would be very high, and it would have difficulties facing with the big three competitive players. So margins will remain the margin pressure will remain, and volume obviously we are seeing the developed markets are not doing well. So these concerns remain as well for Tata Motors. So we are continuing to have a neutral view. We have been neutral on the stock since the last 3 to 4 quarters, and the view has been proven right by the market. Bosch, there are some issues relating to the traditional IC engine being replaced by an electric vehicle. So Bosch has a predominant market share in the IC engines, especially in the diesel ones, and the threat of EVs is looming large. Nevertheless, we don't have much information as we do not actively track the stock. So I may not be able to put a comment on Bosch. Okay,
yeah, because otherwise I was going to ask you that they have mentioned that they are going to go ahead and make some forays into the electric vehicle engine space as well. But appreciate that. One quick question, Bharat, 30-second answer, out of time completely. But if you had to bet on an auto component stock currently, if you track that space, what would that stock be?
Auto component space, we are positive on Sundaram Fasteners, and we are also positive on Motherson Sumi. Some concerns do remain on the US imposing an adverse duty, but the company has seen a consistent track record of maintaining, turning around subsidiaries and delivering quality growth. So these are the two stocks we'll bet on.
Okay, Bharat, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective. That's the view on autos and whether this trade duty changes has any kind of meaningful impact on the Indian automakers. Well, moving on, and the Met Department's warned of a scorching summer. While that's bad news for you and me, someone who's got to be happy about it is B. Thiagarajan, the Joint Managing Director at Bluestar, who joins us now to talk about how the outlook ahead could be. Also, Samit Sarkar from our research team joins in to take the conversation forward. Samit, over to you.
Thank you, Neeraj. Good morning, Mr. Thiagarajan. Generally, the fourth quarter of financial year 2018 and the first quarter of financial year 2019 is good for your business. So what is the kind of growth that you're expecting in this year from these two quarters?
It is true that the summer season is an important one for the air conditioning companies. With the summer heat setting in, I think the market is moving in the right direction. Q4 as well as Q1 are very important quarters. My expectation is that we should expect the market to grow by at least 20%, and our own growth should be at least 30%. We are well prepared. Everything is set in terms of new products, in terms of distribution network, in terms of advertising and sales promotion. The GST related hiccups are behind us. Manufacturing supply chain is doing extremely well at this point of a time in order to meet the demand. My estimate for financial year FY 18 is the market should grow by around 12%. Bluestar's target is to reach at least 17%. I think we will exceed that estimate.
You have kept nearly 40 crore rupees aside as a research and development expense for the financial year 2019. So how will this benefit your company, this higher R&D expense?
I'm just wondering.
See, we are an Indian company. We are 74 years old. We are celebrating the Platinum Jubilee at this point of time. And we have to innovate in a multinational environment. We entered the residential segment in the year 2011, and we have gained market share every year. So in terms of energy efficiency or in terms of sustainability related initiatives like the refrigerants moving from ozone depleting substance to non-ozone depleting substance and introducing innovative features, it is very important for us to do all that to gain market share year after year. So right from 2011 till now, every year we gained market share from around 5% to today our market share is 11.5. So R&D is an important initiative in this. Like we have around 150 people deployed there with world-class laboratories. So we have to compete with Japanese, Korean players. Today I'm proud to say our products are world-class, and we have quite a few products which are global benchmark in that respect. So therefore it is inevitable that we keep investing in R&D.
52% of your sales are from smaller towns. So going forward, will it be the smaller town sales or the urban city sales that will drive growth for the company?
See, more than 50% of the sales come from tier 3, 4, 5 towns. I think the story will continue. India's own growth is going to be driven by aspirational middle class, and therefore we need to understand those markets and become relevant to them in terms of products, in terms of product positioning, in terms of pricing, in terms of marketing communication itself. We have demonstrated this in quite a few tier 3, 4, 5 towns. We will be number 3 player. We would like to consolidate this position. It's not only that. Say, for example, these towns consume products through consumer finance schemes, 0% interest that's being offered. We witnessed around 35% of the sales coming from consumer finance related sales. I do not think that we can ignore this fact for next 3 to 5 years of time. The growth is going to come from smaller towns. That is why I say that it is not only a great summer which is important, but it is also a good monsoon because of the agricultural income that are to be generated and spent in these towns. I look forward to a great summer. I look forward to a great monsoon period.
On the pricing front, if you see in the month of November and December, there have been some discounts that we had seen. So how have been the prices post that for the calendar year 2018, if you see?
I think at this point of a time it is stable. See, it is the supply and demand, right? That everyone knows now the summer season is going to be good. And therefore the prices are stable. If at all there is a margin pressure, it is connected with the commodity prices, where steel and copper went up. I think we have to wait and watch the exchange rate as well. So therefore, I would think that the summer season will go on without much of price discounting.
So what are the margin levels one can expect given the fact that you just said steel and copper prices have moved up?
No, we have been maintaining that our operating margins should be, we have been saying that it should be between 9.5% and 10.5%. With the scale building up, I think we should be able to improve it over a period of time. But honestly, I am of the opinion, around 10.5% operating margin level is a good thing to operate. As the market grows, we will see how to improve it further.
That would be all, Mr. Thiagarajan. Thank you for speaking to Bloomberg Quint. Back to you guys to the studio.
Thank you, Somit. And now we'll shift focus to Inox Leisure, which has opened another theatre insignia in New Delhi. The company added 5 new properties and 21 screens between April to December last year. Are there more rollouts on the annual? Let's ask the management. Joining us now is the Chief Executive Officer, Alok Tandon. Also, Yash Upadhyay from our research team joins in. Yash.
A very good morning to you, Mr. Alok. Let me first start off with asking you, how has 2018 been for Inox and how many screens are we planning to add?
Well, it's been an exciting year for us. We at Inox today have 491 screens across 61 cities, and we have 123 operational multiplexes. I would say that our target is to open about 50 to 60 screens every year. And 2018, we should be filling what we have set our targets on, and we should be able to achieve our targets this year.
Also, sir, can you give us a breakup of that number as to what would it be for the premium screens and for the regular ones?
Out of the 491, we have about 25 to 30 premium screens, and which we say is the 7-star experience which we offer our guests in terms of technology, in terms of service, and the comfort which we give to all our customers. We also lay a lot of importance on luxury, the look, the feel, the ambience, so that when people come to an Inox, it's an outing for them, and we ensure that they come back to our properties at regular intervals to watch all their movies.
Okay, and what sort of capex will you be incurring on a per screen basis in the premium segment? And also, by when do we expect to turn EBITDA break even?
Okay, let me answer the second question first. We are EBITDA positive from day one. It's not like a factory setup where expansion takes place in phases. We open the entire capacity on day one, and we start earning money from day one. having said that, we also lay a lot of emphasis on various, which I earlier said, is how do we handle our customers, how do we ensure that they have a good time, how do we offer crystal clear images and immersive sound. So all those things are important for us in our luxury format, which we are giving to our guests as of now. Going forward, that will be the trend for Inox across various cities in the country, and we will ensure that we come up with these new formats in most of the Indian cities where we are entering or where we are present.
And so what has been the recent box office collection trend like, and can you give us an idea of what your content pipeline looks like for the quarter?
I would say the box office collections so far have been good. We'll have a relatively good year. I would say in last quarter, Padmavat has done very, very well. And going forward, I see a very exciting year for us. We have got a Sanjay Dutt biopic coming. We have got Race. We have got Rajnikant's films. Sharekhan is coming. So I would say that 2018-19 looks very, very exciting for us. And it'll be a great year for the entire film industry.
Indeed, it has been a very good year for you, and your ad revenues too show it. We've seen a sharp 34% jump in the third quarter. We'd like to know, are these levels sustainable going forward?
Our endeavor is for sure. We will surely try to achieve those numbers on a regular basis. We are just pressing the pedal hard and ensuring that this trend continues.
Okay, finally, sir, I would like to know what has been the response like for Insignia, and also what is the core thought behind it?
We always thought that there's a gap between the requirements which a patron has. He wants to see a movie as if he would see it in his own living room with proper comfort, good technology, great sound system. And there was a void we felt in the country where there were cinemas, and we also had our cinemas which were very, very nice with a fantastic projection. But somehow we wanted to up the bar. We wanted them to decouch them, bring them to a cinema hall, and hence what we decided was to go in for our Insignia format, and which I just earlier said has got three legs. It's got technology, it's got service, and it's got a complete luxury. Going forward, we will continue having these entire cinemas all over the country. And but just to fill that void, we as a company thought that we should go ahead, try them out, and people are really loving this entire new Insignia experience, be it in Mumbai, Bangalore, or now in New Delhi, where we have just launched it. We are getting some great reviews, and people are just lapping it up.
Thank you very much, Mr. Alok, for speaking to Bloomberg Quint. Back to you, Shraddha.
Thank you so much for that, Yash. But with that, we're completely running out of time on this show. Up next is Hot Money. Stay tuned into Bloomberg Quint Live.